Welcome back, ladies and gentlemen, to another episode of Stocks to Buy. So many of you have already been jumping in with how you're feeling about the absolute devastation we continue to experience across the broader markets, which at this point, to some extent, as the stocks we're about to talk about today, you're going to see probably getting to the point of maybe over-exaggeration. I feel like we're getting to this pinpoint where the only thing that can save us now is the earnings that are about to come next week. But before we get into all of this, my God, I'll give you a quick rundown. We're going to take a look at some memes. We'll take a look at my accounts. We're going to talk about Meet Kevin getting blocked by Elon Musk, the absolute calamity behind what's going on with Tesla. We're going to take a look at what a real pricing power stock might look like, because it ain't the PP ETF. And then we're going to take a broader look at some more intriguing stocks this week when it comes to the financials. We talked about the banks, things like that. And of course, I'd love to get your comments, questions, and then your recommendations. As some of you already been pointing out stocks that you're looking at buying, some of you keeping it very simple here, picking up some VDY, VFV. But as we should do this Friday night in these calamities, it's always fun to get a little bit of a humor in. So we might as well take a look at a few memes. I do love sharing the memes. I haven't been as memeified in the chat group as I should be these days, but take a quick listen. These are fun to just laugh at.
Nutty! He's scaring us! I'm scared! Come on, man, move this thing. I can't. It's a Gia.
All of you feeling the inflation pain, trying to fight just to get some dollars and cents here to invest. There's some good memes on here. We had a really good one here I thought was funny. Born too late to buy a $50,000 house, born too soon to be a teen TikTok star, and born just in time to have 2 monitors and a light-up keyboard. Very reminiscent to all the millennials that are probably out there. But nonetheless, folks, let's just take a look at my accounts personally to show you the calamity, which I'm not experiencing probably to some crazy extent like a lot of people. I've been buying the S&P 500 now for quite some time. It's been like one of the primary positions within my corporate account. I just screenshotted this before I started the stream because I haven't done like an actual portfolio update properly. I haven't worked out the spreadsheet, too much capital moving around. It's going to be one of these things where come into the new year, it'll be a little bit more fluent. Though what I'm likely to do at some point is start trying to break down my income and expenses. A lot of people ask me like what my saving rate is. I know some channels I follow that personally do this. And hell, I was even thinking about breaking down my Walmart shopping list, because I think there's a lot of inspiration to come from seeing how people like me specifically shop and what we look to buy and how we buy, because we buy good stuff, but we buy it when it's on sale, right? Like we figured out the Walmart, discount aisle, or you go up to these stores when they're at close, like a lot of these nice, grocery stores, and they're getting rid of like the day stuff, like there's sushi and all this great stuff that if you're eating it the same day is pretty dope. But nonetheless, taking a look at my RSP where I hold my other largest position here, we've got the Schwab US Dividend Equity ETF. Let me just pull this up for you guys real quick. I accidentally just closed that screen share off. Where are you hiding in here? Is it this one? Give me one sec here, folks. I'll just pull this up quick and share over. Yeah, the Schwab US Dividend Equity ETF has been getting a lot of pain as of recently. I'm down 5.46%. This one I've held on to for a long time, but a long time in the perspective of me actually buying this probably isn't that long in the next 20 years of my investing cycle, because I've been holding this pretty much since 2022. But you got to remember the market's pretty much peaked out. I haven't been able to contribute to my RSP that much. So this is just reinvesting dividends. And this one's probably been hit the hardest. But again, it's so nice holding these large ETFs because I just don't care about what they're doing. This is the first time I probably looked at them realistically all week, because I have just not been buying that much. And just taking a look at the broader markets is where it kind of sits today with how this week went before we get into some of the drama. I mean, you take a look, obviously Tesla was hit pretty hard, Amazon, Apple. It was a pretty big bloodbath except for the consumer staples. I mean, Coca-Cola did really well this week. Procter & Gamble doing really well after that earnings that dropped. And I think we're going to see continued decent earnings out of these more, necessity-based companies that prove to be, the Ray Dalio kind of stocks that are boring as hell, but that's why I like SCHD. It's crazy to only be down 5% on an ETF like SCHD that holds some of the most boring stocks, right? And those are the ones that will hold up. But what's crazy too is if we take a look at the Canadian markets, what a crapshoot it's been for the financial sector this week. And we haven't even come close to earnings yet for the banking sector here in Canada. And I was really shocked considering how resilient the US earnings were outside of regional banks like JP Morgan. I mean, there were some pretty good earnings overall, right? Bank of America didn't do bad. And you think that would help pressure a little bit of the Canadian banks, but the rhetoric is just so bad. Yeah, my Walmart shopping list, please. I'll do a video on it. I got to do a video on it, man. Shopping in a recessionary environment. I find that every time I skew off my regular content, nobody really wants to watch it, but I got to do some financing. Now's the time I think people need to realize that there's still hope out there that, yeah, things are expensive, but if you shop like we do, it's not that expensive. I'm just saying here, folks, like you can still live feasibly. Food should hopefully not be your biggest fear for paying bills. I really hope none of you are experiencing that, because that would be very heartbreaking. But nonetheless, it's also very intriguing here that like a lot of these safety and security stocks, when you look at things like Berkshire Hathaway, which I'm very excited for their earnings, is actually underperforming the S&P 500. This was like one of the run and hide to kind of companies, considering how resilient their portfolio has been through this kind of environment. And they're down about 9% on year to date, up 8.3%, which is now starting to underpace the S&P 500, which comes as a bit of a shock, because it really just shows you how much fear is baking into this market. Because I mean, when a lot of those big companies that people have been hiding out in start selling those off, I'm curious to what the deal is. But nonetheless, taking a look at this week and what we can expect here, guys, before we kind of backtrack into the calamities, it's going to be the week that is the defining factor to how bad this is going to become. Because, as good as JP Morgan did and some of these companies that have been beat up, I'm really intrigued to see what comes out on Tuesday. Is probably going to be the biggest period I'm going to be paying attention to, especially, when you're talking about things like Alphabet and Microsoft Tuesday after close. You got Teladoc and Visa. Like, if these companies end up like posting, and they're not going to post, but I don't think they're going to be that bad all in all. I think Google, a lot of these companies, is considering how well Netflix did, I think it'll be like it has been for the last quarter, where it might be a mixed bag. But we cannot have like Microsoft and Google start posting like slowing numbers, or because it's been picking up quite a bit on a quarter over quarter basis for these companies ever since they did price cuts. They started squeezing their margins a little bit. I can't see them not seeing more benefit from that, but we'll find out. For you smokers out there, we do have Philips, or is that Philips? That's not Philip Morris. I was hoping we did Philip Morris. I think we're not getting Altria till midweek, but still, Meta's coming out on Wednesday. And honestly, with the amount of attention, and I'm really curious to see what happens when Apple drops their VR, but there is an incredible amount of attention on the Quest 3, which I have on order. I am going to be picking it up. I've actually made a ton of VR content that my fiance wants me to start posting. I was going to make a separate TikTok for, but these VR posts and how like really cool this new Quest is at integrating into your environment. I don't know if you've seen the videos, go watch them. They're going mega viral. I'm very curious to see what their sales look like. Perhaps we should pull it up on Google Trends and just see what the search traffic looks like. Maybe let's just do that real quick. I'm actually kind of curious what the Quest 3 is looking like, because we haven't looked at trends in a little while here. So let me just pull this up for you guys. Quick, Quest 3. How many people are looking into this? Actually, the trends aren't nearly as impressive as I thought they'd be. Just taking a look here. I mean, it's this is the past day. Sorry, let me zoom out. And this is Canada. Got to get out of Canada. Canada can't be the only thing we're paying. Okay, there we go. Now just in Canada. Now we talking, baby. This is what I was expecting with the amount of viral content going on. So this can be nothing but bullish for Meta. I mean, look at this. Quest 3, what isn't the comparable to Quest 2? Let's just see what the peaks were for Quest 2 in comparison, just to get a baseline. Yeah, okay, so Quest 3 is starting to take over some drama here from the Quest 2. So good, some bullish nature here for those Meta lovers out there. You need to build your core viewer base. If you're only going to post one type of video, that audience will only want that type. But if you post different kinds, you'll build an audience who wants a variety. Yeah, it's weird. TikTok, I have like this core audience. It's primarily stock based, but then I post like outlandish random videos, and TikTok's a different beast. I think YouTube, you're right. It's very audience specific, but but just for fun, sometimes you got to live a little bit. I like making money on social media, but hey, maybe the views aren't all that matters. Maybe I should just post some helpful content. The OGs will appreciate it. But nonetheless, let's take a few more look at some of these companies here, folks, because obviously we got 3M coming out here as well. And 3M, I know, has been one that has got a lot of eyeballs on it here. I mean, this thing continues to hit 52-week lows every other week, it seems like, with almost a 7% dividend yield now. So that'll be one that I'm definitely going to be paying attention to here. And just to finish up before we get into the bread and butter here of what this stream is going to be about, we got Amazon coming up on Thursday, Chipotle. So this, like I said, this will be a defining week, but I think it'll be a continuation of the last quarters of just volatility, with some hitting, some missing, like Netflix did, and Tesla missing, right? Other than that, on the Canadian side of the border, as mentioned, go watch my bank video today. I'm very intrigued by people's thoughts on the Canadian banks here. Stepping back, these are dividend yields we haven't seen in 20 years on some of these companies now. Very incredible stuff to pay attention to, right? And in the contrast to all of this, Bitcoin is somehow performing exceptionally well. A lot of ETF conversations here. I don't talk about crypto very much. Small percentage of our our speculative portfolio. But yeah, I'm very intrigued to see what continues to propel the crypto space here. And I'm not going to get too much into this conversation. If you guys want to talk toward the end of the stream, let me know. I hate bringing crypto up. Too many scammers start entering my comments section. So let's talk about what is pricing power, baby. Because Meet Kevin, I think, has become the Karen of the entire social media sphere. I don't know if you like Meet Kevin. If you hate Meet Kevin, I'm going to be trying to be pretty agnostic here because I'm not the biggest fan, but I'm going to try and be just pragmatic and not get too much of my own personal feelings involved here because obviously we're all clowns on the internet and Meet Kevin is becoming the king of the clowns. But he has this ETF we all know called the Pricing Power ETF. And I honestly feel bad for anybody that's investing in it. I'll explain why. But pricing power. If a company does not have much pricing power, an increase in their prices would lessen the demand for their products. A company that has substantial pricing power is one that provides a rare or unique product with a few rivals in the market. In this case, if the company raises its prices, the increase may not affect demand because there are no alternative products on that mark on the consumers. And, you can't really choose anything else. So we're going to see how much definition Meet Kevin's been able to follow this because he's been blocked by Elon Musk. And I think if I hope he reads his comments because I think people in his comment section are starting to have some more base in reality. If you watch the Tesla earnings call, I really did not think it was as bad as Meet Kevin's making it out to be. Like from Elon's standpoint, I broke down some clips we're going to watch, but I want to focus on the comments first just to give you some perspective before we look at the calamity that's unfolding here. But how long until Elon Musk blocks me for calling BS? Zero executive management on this earnings call. That is what he tweeted under his little bearish video here, or his bearish little meme saying, "Don't worry, everything will be fine, clown." And let me just read you these. That's literally the opposite of his message. He sat there saying there is a lot of macroeconomic challenges, but that Tesla is most likely boat to survive even the stormiest of seas. Guess someone is upset about advertising and Tesla's decision to not bother wasting money on it. As we all know, I think Meet Kevin has somewhat of a at this point like an ego thing where he just he has to be a part of the bigger picture, and he just likes to poke the bear. And he was at one of the earnings events and he told Elon, he managed to talk to him about advertising, and he just won't shut up about it ever since. I think at this point, anytime Tesla does not have an all-time high sales quarter, the market and the critics will react as though it was a total failure. Never mind that the quarter may have been the second largest quarter in history of the company. Even Elon Musk explained this. I think he sounded focused. He was super clear and realistic with the economy. Tesla is the best in the world. Again, I don't think these people commenting on his Twitter are they're not even being stock twits. It's not very, harassing. It's not very trolly. They're just straight up what are you talking about? Even in his YouTube section, Kevin is a D writer, a drama for clicks. Who cares? Is this high school or cheer team or what? Kevin, please stop being a Karen. I don't know how much he's listening to this or if he's just enjoying the engagement, right? So let's take a listen to some of the clips that my jaw kind of hit the floor at the clownery, and I can almost respect it because, again, I'm a clown. I come from the entertainment industry. We know what turns dollars. Just like Jim Cramer, it's not about being right anymore. It's just about getting clicks, right? And that's something that Meet Kevin has been fabulous at. So let's just take a listen. I'm going to break these down because I just kind of compiled this from the stream that he did or the video.
This is like a slap in the face to the investors, the way these earnings calls are managed. Tesla board member, I'd be like, what the hell are you doing, dude? Why are you dodging the SEC? And basically crying on the earnings call? I don't know. He needs a manager. Poor guy. Put some pants on and run it as a professional call. And I know some people like Kevin, you're the one who makes pee-pee jokes all the time. Yeah, what's wrong with that? I like big pee-pee, okay? I really like big, juicy pricing power.
Yet he doesn't understand what pricing power means. I really feel as though he's super disconnected. And I think there's a specific reason why. And I also just think it's funny that he holds all these super high standards for Elon Musk, the guy that literally became the richest person in the world. And his attitude and his nature has not changed on any of these earning calls, in my opinion. Yet he's going to criticize the crap out of this guy, right? Because it's easy to poke up, but it's just funny.
Our stocks, I like that, okay? I don't think there's anything wrong with that. But I'm also not in a professional earnings call with Wall Street analysts.
Yes, and Elon doesn't care about that. He doesn't care about Wall Street or professional. He is a troll. He has been since the dawn of Tesla blowing up in 2019 and post that. Nothing's changed.
Elon needs to get his ass off of Twitter and Diablo. He's not stable right now. Poor guy. I really feel bad for him.
Could you imagine? And then he wonders why he might have been blocked. What, like you're telling a guy that is running one of the most powerful growth companies on the planet that he doesn't know what he's doing. I love it.
But he probably hates me. And that's okay. That's compressing margin. That's not good. Margin compression, which again, feels like shrinking PP, but relative to all cars, that's
So this is my favorite thing. This is my favorite thing about the entire stream that he did discussing this was he tries to constantly bring up pricing power. He constantly tries to iterate it because it is his motto. It is the ETF that he launched. Yet he completely says margins are shrinking. Like that's not pricing power, but because it's the auto industry, all the autos are getting wrecked, but pricing power because Tesla. Like it's so contradictory to what is entire like so look, you know, when you go back to when this guy was flip-flopping across the market, and like again, I don't think there's anything wrong with him flip-flopping. I just think when he had control over his own money and his opinion would change on a dime, he would immediately change his entire investment decisions, which again, I have done that in the past and it's worked great to my favor. The difference between then and now is he's managing your money. The idiots that are dumb enough to invest in this guy's fund are the people that he can't just flip-flop. He can't just change his whole perspective. I'm sure he could if he wanted to be an actively like fund, like manage the funds, but he just can't. He knows it's too hard at this point to just flip flop a fund, considering how much like, you know, he's got into it now. So he's going to burn the bridge with you guys in it because it's not his money at this point, right?
true. That is true on all cars. The question is, of all the cars, which still has the best pricing power? Well, of course, it's Tesla. So what does that tell you for Enphase?
It's not pricing power.
Oh, no.
And I love the way he immediately realizes how screwed Enphase is, and yet like he still holds the stock. A year, 2 years ago, Kevin, if he knew something bad was coming, he'd be out. He'd immediately be out. And now he knows. He's admitting he understands. This is a financial advisor. This is a guy that is running these ETFs.
Not more pain. No. Keep in mind that even though I'm a licensed financial advisor, licensed real estate broker, and becoming a licensed stockbroker, this video is not personalized financial or real estate advice for you. This video is generalized perspective. This video is not and shall never be deemed reasonably sufficient information for the purpose of evaluating a security or investment decision.
Now, my favorite thing is he has to do this because he's been getting sued, because he was offering financial advice during his campaign in California, and he's got lawsuits galore coming down his butt. And so he's got his lawyer that he jokingly, like you can tell he doesn't care. When the way he reads this stuff, it's an egotistical joke to him just so he doesn't get sued. And then he immediately goes into selling you another product.
And if you want to invest in HouseHack, you go to househack.com because the deadline is November 1st. By far, when we survey people, there are two big reasons. They're like, if anybody could do it, they're like, I want to bet on Kevin for the real estate startup. Or the second reason is they want to diversify. Those are the two big reasons.
And he makes a joke in the rest of the stream saying like, oh God, diversify. Now it's time to diversify from Tesla. So now that you put all your money in the PP ETF, hey, why don't you put it in my house hack fund? Because I've done so well in the past. Like, I have a real good proof of concept.
We're getting for people. For house hack, this is just some things that we're hearing in surveys. No guarantees. Obviously, investing in startups is risky. Read about it at househack.com and read the circular there.
I highly recommend you read the circular because again, this guy was a guy that picked so many stocks that have been going bankrupt. And again, I don't want to blame him because a lot of stocks I've dealt with in the past are going bankrupt. It's just the market environment. But again, I have such a hard time just listening to him and then like listening to him do shill products in between all of this. Like immediately tells you, hey, probably not financial advice. Hey, probably should be careful. But hey, buy my house hack product. Invest in all me. Take these crazy, give me all your fees. He knows there's more money in fees than there is investing. He's going to run his businesses. He doesn't care about investing anymore. He's a clown on the internet just like I am, and I can recognize it for what it is. So make fun of me. I mean, by all means, I'm not perfect. So make fun of me too. I'm just pointing out the clown tomfoolery as I see it because I have been a stage performer my whole life, and we get it. So taking a look at the Meet Kevin Pricing Power ETF, which is now starting to underpace the S&P 500. No surprise. Let's see what Meet Kevin's been buying. Oh, heaven forbid you buy an ETF that has 25% of it in Tesla, 15% of it in Enphase Energy, 9% of it in Nvidia. So basically over 50% of the ETF or so is what? Basically 50% is just in these three stocks. And then you get a little bit of diversity in Intel, basically all the semiconductor stocks, which we know don't also have pricing power. Their margins are shrinking. We're going to discuss this as we break these companies down individually. ASML, like these companies are proving to not have pricing power in this market environment. And Tesla should be one of the best examples of this, right? I think Tesla long-term is one of the greatest companies that will likely ever exist. People will argue that, debate it. I know everyone's got their own opinion, but in the macroeconomic circumstances, stance. Hey, guess what? Car companies can't survive. High-priced powered products do not survive. Tesla cannot increase the prices on their vehicle and keep demand up. They're fighting to keep the demand as it is. The opposite of pricing power. So they're cutting prices, they're losing margins, their EPS is dropping, and guess what? The stock price is going to reflect that to some degree. The question is how much of that future hope, future expectation maintains in the stock price? Because now we're playing the bottoming game, right? Like, how low can this go? I'm praying to God it goes under $200 a share, because I can finally perhaps start buying it. Might want to try and start picking up some shares. We'll see. You'll have to subscribe for when I decide to do that. Might be at the beginning of the year. Maybe I get giddy if it drops low enough, quick enough. Maybe I buy it before. Maybe it never goes below $200 a share. Who the hell knows? I'm gambling. I'm speculating. I'm just pointing out the fact. And I also find it really funny from the AI perspective of things, which is all fugazi for right now to a lot of extent. I love that, I think AI stocks are starting to perhaps see their peak in their day. And I want to kind of compare this to a few AI companies. And I want to talk about, Nvidia and some of these stocks. But it just blew my mind because I was listening to a Tesla bear on StockTwits who's a huge believer in Palantir. And he was going off about how Tesla's just a car company. And I don't believe Tesla's just a car company because it's purely based on the revenues. And that's like everything money. They think it's value investing to them is whatever the cash flow is what the company is. And this guy that kind of had the same mantra was a big believer in Palantir. And he's like, Palantir is this great AI company. It's this great software company. It's all this and that. Yet his same argument doesn't make any sense because when you take a look, first and foremost, at the income that this company produces, it only makes 1 cent a share. And as everybody that's ever looked at a balance sheet, especially Palantir, knows, it's all coming from interest income. Palantir doesn't make any money off AI right now that hits the bottom line EPS. Almost all their income is coming from high interest accounts, bonds, and God knows whatever else. As far as you can tell from an earnings standpoint, if you're going to batter that case against Tesla, it's like, well, then you might as well call Palantir a bond company because that's where all their earnings come from today. It's like, come on, man. I got nothing against Palantir. Don't get me wrong. The only thing I got against Palantir, and I'm really excited for the earnings to see if they can keep some growth up because, if this company is what everyone says it is, and it's got all these government contracts and it's growing, hopefully we can see their growth rate start to pick back up. Because a lot of people have to understand Palantir is at an expensive price. It's better around $10 a share if you're a value investor. Again, using your own arguments against you. And I'm not a pure value investor. I don't believe value investing is an end-all be-all solution because it really misses out on opportunities. It's like saying Apple was only a computer company until they invented the iPhone. Do you not believe these companies are investing in products and IP that have value in the future? I'm just saying. So when it comes to Palantir here, I mean, if anybody holds this, they better really hope growth rates stay up to some extent. A lot of bullish nature on it. But again, the stock is trading at a premium in a very hype market related to bubble-like territories. Again, I got nothing against Palantir. You just got to recognize that there's a trend going on. And when these trends come to an end, crypto is still a big deal. NFTs still have real capabilities, just like they did when people were hyping them up in 2021. Just like AI has real capabilities, but you can't over-exaggerate that and not take profit. I know a lot of people are buying this, have a lot of gains from buying the bottoms, but you got to take profit in these kind of markets or you could get burned. So just be careful. I'm just word of the wise. I'm not saying sell it. I'm not saying buy it. I'm just, pointing it out. So let's talk about Enphase. Another wonderful meet Kevin pricing power stock. You're paying a guy a 0.75% management fee to basically buy 5 companies. Enphase is one of those. And Enphase, hey, guess what? No pricing power. Hey, guess what? In a time where people don't have a lot of money, are they worried about putting solar panels in the roof? Are they worried about growing solar? Hell no. The entire energy sector has been getting wrecked. Don't matter how much pricing power you think you have, you realize how much you don't have when the market goes down. So again, complete opposite from what Kevin's been selling here, but the whole energy sector is getting wrecked. I mean, look at Solar Edge. And some of these, I think, are starting to get over-exaggerated. I think some of these companies are starting to just be a huge fear wave of sell-off that have nothing to do with the fundamentals. There's a disconnect. There's people are just getting too fearful. So this is where we start seeing like the opportunities start to present themselves if you're interested in the renewable energy space. I think there are some huge value play. Now, I'm not buying these, but I can recognize that some of them are starting to disconnect, right? Northland Power, this one's been getting wrecked. This is more in the industrial scale of buildings like wind farms, and they started the largest wind farm ever off the North Sea in Germany, right? They're doing stuff globally at these scales, and they've been getting wrecked because people are not investing in this right now. Governments, companies, they are not investing. Their primary goal right now isn't to build a new wind turbine. And this company is not seeing the sales they were once seeing. Their last quarter was absolutely abysmal. They have a lot of debt, so they're seeing the interest payments completely kind of hurt them. I mean, they've been selling off some of their assets. I think they sold off some of the North Sea, like one of their biggest starting assets when I bought this company in 2014. I'm really glad that I pivoted out of it because I think I sold it in 2022 on the first bit of a downturn here somewhere. I think it was somewhere in this dip. And my God, I'm kind of just blown away that this has returned to the prices that I bought it at. back in 2014. One of the first companies I ever bought. Kind of blows my mind. But it just shows you the risk in the market, right? Like it doesn't matter how good and how long a chart can go. When those suckers start going down, man, this is why it's so weird to be an ETF investor today from a guy that used to primarily just buy individual stocks. But hey, I think, again, if you're younger, you have the cojones, you can take the risk, you got a longer time horizon. This is your opportunity to build an obscure amount of wealth, in my opinion. Even I've been telling good, like realistically, if you think you know something about a company and you're comfortable with it, it's nothing wrong with buying 5 or 10% of your portfolio and taking that risk, because this is the market to do it, in my opinion. So finally, Nvidia, right? Now the chip stocks have been getting hit. TSM's margins are shrinking. Their revenues have been going down. And here we have Nvidia, the golden child of the entire space that me, Kevin, has been riding a crap ton of money on. It is trading at price to earnings multiples that are absolutely still insane. And yes, they have completely controlled this cloud computing. They've been completely controlling, this whole AI space. Even Elon, like on the earnings call, they said they bought a crap ton of those H100s. Those friggin' chips for AI, like they were selling for $40,000 a pop. And basically, Nvidia has completely saved themselves from this market. And I want to remind you that when we went back in time, go back to 2021 crypto bull market, Nvidia was absolutely on fire. Why? Because there was a huge demand for people to get into crypto mining and chips. So the price of what was it, like what I can't remember, 18, I don't even want to, I can't even remember the name of the chips. But anyways, the graphics cards, they were selling for $3,000 or $4,000 a pop used on like eBay. And then guess what happened? The crypto market burst, the speculative market burst. And guess what happened? Nvidia all of a sudden could not keep up pricing power. All of a sudden, the demand for basic graphics cards started dropping, and all of a sudden their earnings were being reflected, saying, oh my God, our biggest environment. You got to remember, the CEO back then was all about crypto. That's all he would talk about. Wouldn't shut up about it. Now, guess what? CEO doesn't even hint at mentioning crypto anymore. But do you know what he's going to repeat 10,000 times? Hey, AI, cloud computing, let's go, because it's a B2B business. Forget F the end user. We don't care if you're gaming. You're nobody to us anymore, because Nvidia is selling to the conglomerates, to Elon Musk, to Mark Zuckerberg, to Steve Cook, all these crazy billionaires, man, or Tim Cook, Steve Apple, Tim Jobs. Just invert all the names, forget about it. But I mean, you're looking at Nvidia here, that literally their entire business model today hinges on the end of people scaling cloud computing. So literally think of it this way. If Apple, Amazon, and these companies decide, hey, like we've built out our supercomputers, we're at where we need to be, the demand for these kind of chips are going to fall off a cliff. Because there's only so much demand from these mega cap companies that are controlling their entire balance sheet right now. And at any point in time when maybe somebody comes up with a better chip, maybe they start doing their own chips, you don't really know, but they understand, like, these companies aren't dumb. Meta understands, like, vertical integration. Tesla understands that. And they understand that, like, if something better comes out, or if they can do it themselves, and I wouldn't be surprised if they are trying to do it themselves, like Apple is, that eventually the demand could severely fall off for that. So there's an absurd amount of risk, because I just cannot believe they're going to keep up the growth rate. Don't get me wrong. Nvidia blew my mind. That earnings they posted was insane. And it was insane for those specific reasons. Even Kathy Wood sold that at the bottoms. People were saying short it. I was saying short it. I was saying there's no way. But it was all because of B2B business. So for that same reason, it's good for the company, but it's also going to be very bad. And there's going to be a future where it's going to not come to that end anymore, and they just can't justify 100 times multiple. And Nvidia will always be volatile. I'm sure it could do fine. I'm just saying there's risk. That is the risk with a company like Nvidia. So just to recap, I don't think any companies that Meet Kevin is buying, if you understand these companies to any real degree, especially in their history of the volatility, the ups and downs, would believe that these companies have any real pricing power. Do you want to know what kind of company has pricing power right now? What company has been increasing prices and not seeing a huge drop in volume? Look at a company like Procter and Gamble. That's not exciting. That's not AI. That's not pricing power in the car. And no, it's nothing that is exciting, and it will never generate clicks. These are the kind of stocks that you can't make money on as somebody like me, Kevin, and he'll never put this in his ETF. But the true reality of a pricing power company is a company that can truly increase prices against the backdrop of a terrible macro environment and still see the same demand and continue to increase some margins, continue to increase revenue. Procter & Gamble should be your number one go-to stock if this is what you believe. And there's a lot of companies like this that are recognizable in the market right now. Hell, I even think some of the railways. You look at a company like, Kansas City, or the CP stock, right? Like some of these railways, the stocks that Warren Buffett's buying, for crying out loud. These are the kind of companies that have pricing power. These are the kind of companies that are undisruptible right now in the market, and they're continuing to hold up, right? If me, Kevin, understood and like believed in what he was really shilling to you, and if I ran a pricing power ETF, like just think to yourself, don't presume me, Kevin, some all-knowing God that just know, like presume that like Elon Musk, me, Kevin, presume they're just people, just like you. And they just did certain things. They built the stepping stones, and they built a massive house doing these stepping stones that anybody can do if they put the time and effort in. Now, obviously, it's not going to be easy, something like Elon Musk did. And me, Kevin, has done amazing for himself. But you have to understand that like at the level that he's at, you have to think about where he's coming from and realize that he's just shilling entertainment value to convert it into dollars. That is his business model. That is not a business model of a pricing power ETF. So again, I've got to get off my horn here and stop beating up me, Kevin. Let's read a few of your comments and we'll talk about a few more stocks. I want me, Kyle. I'm glad you stuck around this long, Vicko, because I've also been ADHD brain in a market like this, but I'm not shilling you insane products. What do I sell you? A chat group? You want to join my chat group and talk with me and have some fun? You don't even have to do that. You can come back here for free. You want to buy my spreadsheet products? You sign up to my Patreon. I mean, I'm not really shilling as much as I'd like to be when it comes to, I wish I could shill an ETF, but do the stress of that. I mean, I can't spiel the business that I do outside of this, but I'm working with some like big influencers and some really big companies, and I'm dealing with CEOs. And if there's one thing that I've kind of just taken into consideration here, it's just the insanity of sorry, I'm like rambling off here. I'm choking up a bit. It's just the insanity of realizing that you can't do multiple things and get away with it. You can't be running like, an ETF and also be an idiot on the internet and find like huge amounts of success in that, because when it goes against you, it's going to go against you in a way you can't imagine. Because if you're buying an ETF like Berkshire Hathaway, how much do you have to listen to Warren Buffett blow the stock up once a quarter, maybe once a year at an annual shareholder meeting? That's it. Me, Kevin, goes on the internet every day. And if that ETF goes the other way and the media goes against him, guess what? You think media can destroy a company like Tesla or these big mega cap companies like Meta when it dropped down to 90? Well, guess what it's going to do to a public facing star that's running it? It's going to be devastation, right? So I've learned in the companies that I'm working with that they're avoiding that conflict. I've seen them, like, they completely changed up their business model to avoid those kind of calamities. Hell, it was even like Robinhood. I mean, Robinhood tried to get into social media too, and then they realized the regulatory insanity behind that just didn't work out, right? Nonetheless, pull up the S&P 500 chart, last 5-year timeline, and also pull the stock market psychology chart and put them side by side. More red to come. Maybe we'll have to do that. PSQH. What do we got here? Let me pull that up real quick and we'll take a look at some of the stocks. I just want to answer some of your comments because I got stocks that I want to look at. PSQH. PSQ Holdings. What is this? This stock just fell off a cliff. It looks like it just IPO'd. Was this a SPAC? What is this, my brother? Am I looking up the right company here? Tell me what's going on with this. PSQH. I just bought some ASML. Great company. I do agree. They do have some competition coming out with, surprisingly, Canon, the camera company. I talked about that briefly. Find it really interesting that Canon, of all companies, was able to basically replicate. China hasn't even been able to replicate what this Dutch company ASML has done. And we're talking about like refining like atoms from like, I don't know if you guys have ever looked into ASML. It is one of those companies where if I could go back to school, it'd be the only company I'd want to work with, because what they're doing is more advanced than what they do on the space station. It is probably one of the most advanced pieces of tech on the planet, as they basically, I think, shoot a piece of tin, a little tiny piece of tin, they laser it, explode it, or flatten it with a laser, and then they laser it again and explode it into plasma light, and then narrow that light down to like 1,000th the width of a human hair, to like literally particle-like levels, and that's how they etch it into a chip that ends up in your iPhone. And the crazy thing is do you remember going back in time where like, think about how crazy this is. If you go back, remember Walkmans and all these devices when you were kids, that they would screw up, like they would go corrupt. Like sometimes the chip would just corrupt. You ever notice that doesn't happen anymore? You know how crazy advanced these chips are and they don't F up? Usually it's something that goes wrong in an iPhone is like battery related. It's never a corrupted chip, or like, isn't that crazy? I mean, it's kind of a mind-boggling concept considering even chips have to deal with like radiation in the air. Like if you know anything about chips and like just the positive and negative functions you're dealing with, and it just takes one radiation atom from like the sun to hit it, and it can screw and corrupt the whole chip, or it could change the entire like line of code. I don't think people appreciate the reality of these kind of companies, right? But there is competition. I'm really shocked that Canon was able to produce the same kind of 2 nanometer chips that's basically at the level Apple is buying. What else we got going on? Where's RioCan below $15? Potentially. I'll have to take a look at RioCan earnings. I'll do a breakdown of that when it comes out. We still hold RioCan, by the way. It's one of the long-term holdings. I mean, my fiance, she's been holding on to it forever. It's one of the positions in our portfolio. I still like it. I mean, I want to visit the well. I'm going to do a video on it. Maybe when earnings come out for RioCan, I'm going to go down to the well in Toronto. And for those of you that don't know, RioCan in Toronto has basically been building this whole new idea of living in a city in the sky. So they built this massive, like insane, like huge freaking complex where a huge percentage of it is residential, a huge percentage of it is office, and the whole bottom is a mall. So it's kind of like Costco wants to build condos above the Costco warehousing. Like the future of buildings is going to be cities in the sky where you're never going to have to leave the building to do your shopping, your entertainment, your living, your work. I mean, it is literally going to be the future of condo buildings, in my opinion. Hey, I think Meet Kevin is just entertaining with some stock market news tied in. Reminds me of how sort of like the person that tells a bunch of truths, then adds one in a lie. Yeah, it's entertainment. It's the job, right? Kyle, if I had an ETF, I'd be a buyer. I do appreciate that greatly, but I'd prefer, this comes back to like the whole idea of like, finance or personal finance is just that, it's personal finance. And I don't think if I made an ETF, it would be made for like a specific kind of person, and it would be boring. If I had to so let me put it in perspective. I wouldn't invest your money any different than the way I would invest my mother's money or my family's money. And if I'm investing your money the way I would invest my mother's money with that kind of level of protection, you wouldn't need me to do it because it's going to be the boringest portfolio you're ever going to see. That's why it doesn't make sense for me to make an ETF, because I would be like meat breath over there, and I'd be day trading the crap out of it because I wouldn't have the fortitude to see a market shift like this. And I would itch out and be like, I don't know how low it's going, and I don't want to ruin your money. I'm out. I'm getting out. I don't trust it. I'm squirrel brained, right? Like, because money matters, man. That's why you got to be careful. Like you gotta just understand where you sit and be comfortable with what you're doing, because money does not come by easy for a lot of people. So you got to respect it. And I would respect your money just as much as I respect my mother's. So don't let me invest it. You just go buy an S&P, some VDY, call it a day. Pull up the S&P. Yeah, so we just talked about that. Let's see a few more stocks. Procter & Gamble. Dang, I bought MMM. Procter & Gamble's expensive. MMM is cheap, right? So what I'm looking at right now specifically, and I will be buying individual stocks in my TFSA. It's just a matter of getting to that point because, like I said, I'm stuck in this kind of, what's the place, purgatory between death and life here, where I'm looking at like investing money I have now. But if I invest it now, I'm just going to be selling it at the end of the year and immediately transferring it over. And I don't think it actually matters that much. It probably doesn't really change much of the tax liability. It's just for some reason in my brain, I'm like just clicking that button to buy and just to sell it 3 months from now when I'm just going to move it over anyways. Again, I think I'm just being too hard and like ridiculous about it because I should just be buying this market right now. It's just a matter of I just want to stack cash and just lump sum a lot of it into my TFSA. I don't even feel like I'm going to lose money. It's like even if the stock went down, hey, it's a capital loss for 3 months, write it off against some of my income, put it in the TFSA. I could do that too, right? Dollarama is up there too. Yeah, Dollarama is proving to be a pricing power stock. Again, Meet Kevin is not looking at these kind of companies. Dollarama, these dollar stores in a recessionary environment, they have been, the dollar store isn't the dollar store, right? Have you gone to the dollar store recently? There's no dollar in anything anymore. They're like $5 products now. I think the only thing that's cheap is some of the candy, and candy prices have been going up because sugar's been going up. Sugar is like a commodity that's just exploding right now. Hey, Mary, you have a great channel. I've been adding to Brookfield here. Yeah, Brookfield's an interesting one from a valuation standpoint, which is BEP. Brookfield, very interesting companies from the Brookfield side of things. I like TAN, Solar Energy, or Solar Play. Yep, agree with Jason. What's Jason saying up here? Did I miss Jason here? 100% agree. Respect. Did I miss Jason's comments? Jason, sounds like Cybertruck is going to drag down Tesla for quite a while. I do agree with that. It's good. Like, like I've been saying, we're in this period right now where it's going to be a temporary problem for most companies. Tesla's not the only company that, like, there's no resiliency in a market like this. It doesn't matter how great of a product you have, unless you're a Dollarama or a dead necessity to life. You don't have any pricing power. You don't have any control over the market right now. So if you have big debt, whether you're a utility, telecom giant, or you're a company like Tesla trying to launch new products, you're going to have to ride through this environment, especially with a lot of the inflationary pressures, supply, issues with certain things. Because you've got to remember, when they launched the Cybertruck, which was like 3 years ago now in 2019 or whatever, back then inflation wasn't out of control. So they could sell it at a certain price that they probably can't meet today. So, I mean, you got to tamper expectations and just be patient if you're buying the company, which is why I think it's going to be a buying opportunity. Because I think we come out on the other side of this and do a bull market that people just aren't appreciating. They're getting too caught up in the macro and forgetting that there's a long-term, big picture thing happening here. And that is this technological revolution, this massive jump. Like, I mean, I just saw a video today. I shared it in the chat group. I mean, it was Amazon is even making robots. Amazon doesn't publicize it, but they're basically realizing, like, Elon's got a good idea with like robotics and stuff, right? So they're trying to make robots for their factory now too. Literally, like these robots, the humanoid robots, same sort of deal. It's kind of crazy, right? Like that's where we're going. And it's going to be insane what that does for margins and earnings and all kinds of stuff. It's going to give it 10 years, right? Give it a bit of time. Buying TSLY before $10. I don't buy option ETFs. I know some people like them. I try and avoid them. There are a few actually I came by. There's one in the US that I like that has no volume. God, I wish I could look it up right now. I'll share it in another video. I was going to do one on it specifically because, my parents heading into retirement, they want higher cash flow. I like the idea of option ETFs, but I don't like hardly any of them. They're all garbage. And I don't trust TSLY either. None of them have a long enough time horizon or like a long enough, performance chart. I don't trust the management with it. I'd rather just write my own covered calls. But I found one in the US that is a Canadian covered call ETF that hedges the Canadian dollar and owns 50% assets in things like Home Depot, McDonald's, Pepsi, like these great companies, and they write covered calls against it. It's actually kept up with the performance of the TSX. Which kind of blew my mind. And they've been doing it for like the last 15 or 20 years. So I was like, wow, okay, I could buy this. The only problem is nobody even knows it exists and there's no volume on the stock. It's really hard to buy and sell an ETF that has little to no volume. So that's one of my mom's concerns. She's like, how do I worry about this if there's no volume? Actually, speaking of stocks that my mother's interested in, I hope she's not watching this stream. She hates when I talk about things. My mom likes looking at individual stocks. We share ideas all the time. What I'm really intrigued by right now is these mortgage companies that aren't dictated by like having to put loan loss provisions aside. Look at this company. This is a company called MCAM Mortgage Group, and there's a lot of them like this, baby. This is a part of the market nobody's talking about right now. And this is a company that does lending, private lending. So they'll take your money. You can, this as their business, you can give them your money. They'll invest it for you into people that want to buy real estate. And it's just a second party lending company. And what's really neat is they've been used to handing out high interest loans for a long time because they'll hand out second mortgages. They'll hand mortgages to people that might not be able to get them from the bank. So they come at higher interest rates. So people buying private mortgages, they don't have the same concerns or the same calamities like getting a mortgage from a bank. And most of their clients are used to higher interest rates. So I'm kind of blown away that this thing's paying a 10.01% dividend, trades at a price to earnings of 6, has a long history of doing great, increasing the dividend, the stock price is accumulated, and these are flying under everybody's radar right now, but they are doing very well. And this is not the only one. So there's a lot of weird stocks in the market that trade against what you think would be a bad idea as an investment, but they're crushing it, absolutely crushing it. It's just one stock. And also in the conversation of stocks getting kind of clamored here, like PayPal is another one that I'm kind of shocked has reached the levels it's reached. I'm very excited for PayPal's earnings because, for this thing to be dropping down to a price multiple of like 14, 15, it is now back to like bank-like price multiples. What is like even JP Morgan trade? I think it's closer to like a 10 times multiple right now. So for PayPal, 8.5. So it's got a little ways to go if it's going to trade like a financial institution, but I'm very intrigued. PayPal is one of these stocks that I'm not buying it, but I'm very bullish on it at this price point. I know a lot of YouTubers are, there's a lot of talk about this, but the stock just can't get out of the gutter. And I'm curious to what the bottom price point looks on this because they have competition. It's kind of like Netflix. Honestly, it's probably one of the reasons I won't buy it is because there's no growth really ahead of them anymore, but they do have a lot of control. They have a big brand, the users are using it. I use it all the time. So I'm very intrigued to see what happens with this company. But let's finish up with a few more Q&As here, folks. See what's going on. Enbridge, Fortis, yeah, great companies. CNR on sale like crazy. Will recover nicely. I do agree. Everyone hates Enbridge. I got to do some TikToks on it. TikTok is obsessed with Enbridge because people seem to think they can't afford the dividend, just like TELUS, but they don't understand like write downs. You gotta be a little bit more, intermingled in that balance sheet with understanding the different metrics. And most people shouldn't be buying Enbridge if you can't understand the metrics, but you could just buy VDY. VDY holds a huge percentage of Enbridge. I'm in Florida right now. That's great anecdotal information, my friend. How's Florida? Is everybody from Canada? Absolutely, except for the guy from Florida. I think over 50% of my viewer base is Canadian, so I do appreciate the fellow Canadians. I wish you guys. I ran into some people that commented on my videos that said they saw me on the street. I'm always kind of out and about, but I feel free to say hi if you see me floating out on the street. I think that'd be super cool. Buying Canadian utilities right now, yes. KLIP, what is that? KLIP. Let's take a look real quick. KLIP. This is the Crane Shares Covered Call Strategy ETF. This one, again, as far as I can tell, doesn't have a very long track record. It's down 32%. You're not intriguing my interest already. Let's take a look here. So what are they holding and what is their covered call strategy? I'd have to do a deeper dive, man. Just be careful with covered call ETFs. If you're young, they're mostly a waste of time. Expansionary stocks, inflationary stocks, and recessionary stocks. Should have titled that the video, my man. It would have been a better title here. You know what's another really interesting stock, by the way? Getting into it when it comes to recession-proof stocks, I think one of the deepest discounted stocks today that I've ever come by. And, if I truly believed valuation was the only thing that mattered, which I don't, obviously, but if I truly believed valuation is the only thing that mattered, I would be buying this like there's no tomorrow. I would put if I was back in my early 20s when I started investing, I would have probably owned so much of this stock. British American Tobacco, I don't like Altria Group. I hate Altria. Philip Morris is okay. But when it comes to pure valuation and growth metrics, British American Tobacco has a much better foothold than most of the mega tobacco companies. And, its PE is 6 and it's growing. Like this company, their revenue was up 4.4% in that second quarter. Their net income was up 112%. Like just take a look at this company. I can't get over it. It just kind of blows my mind at, let's just take a look at the free cash flow first. Is their free cash flow reasonable? Yeah, I mean, their free cash flow has been growing in this crazy market. Their annual earnings are stable. They're growing in all the different aspects of like vaporizers, and they're really handling the smoking market. I don't know. I just think this is one that I've talked about with my parents as well. I said, my parents, they've smoked. I said, hey, you should probably get some of your money back out of these tobacco giants at this point. Quit smoking, buy the giants, just collect some dividend checks. You guys are a lot older. You could ride this for the rest of your life, and it's going to pay you 10%. And they can afford the dividend. What's their payout? Like, look at the payout ratio on this thing. How often do you see a stock with a 10% dividend yield with a 44% payout ratio? That is like unheard of. Like non-existent. Even MCAN, I think, pays out like 80 or 90% of their dividends. I mean, and look at this. Look at the profit margins. These are tech-like profit margins: 31%, 48%. And the best thing about it, they're globalized. They don't have to deal with the same like taxes that Canada charges on cigarettes. Canada and the US, I think, are just not the best markets for tobacco. That's why I like British American a lot. Everything about this company just blows my mind. I'm like, there's no institutions holding it. That's the only bear case. No institution will ever buy it. The stock price will never appreciate. There's no appreciation ahead of a company like this because it's not ESG friendly. It's not part of the future. No big fund managers put money in this because, their shareholders would just attest it immensely. But man, if you are a true value investor, you'd be buying this every day of the week. Every day. Your full rate of return comes from the dividend. Forget about it. Just walk away. You're a mobster now, baby. You own one of the biggest the biggest tobacco giants on the planet. I've been drooling over this company. I just can't buy it because I know institutions won't buy it. But if you're looking for cash flow today, forget covered call ETFs. Just buy tobacco giants. Nonetheless, Bitcoin halving's coming. To be honest, I don't want to get into it, but I'm looking at crypto again. I'm looking at some crypto. We've got I should take a look. I actually haven't looked at our crypto wallet since the crash. And I sold a lot of my crypto out of fear because I had like 10 grand sitting in Bitcoin. but we still, I think at this point, we probably have like at least a good couple grand sitting in the crypto market. But yeah, I'm very intrigued. I've been waiting for one aspect of the crypto market being the gaming market, but it's a story for another day. Pull up those charts, Kyle. Come on, don't brush it off. It will be an eye opener. The S&P. Okay. I'm going to finish up on this because I don't want to be rambling all night here. So you want me to look up the S&P 500 and the stock market psychology chart. So the S&P 500 and the psychology what? Let me make sure I'm getting that right. The psychology chart. Now, is this something that's like overlaid? Is this just going to come up to me right away? Oh, I know what you're talking about. I'm an idiot. I should have recognized this a while ago. Are you talking about the cyclical trends when it comes to like the human psychology within investing? I just clicked on it. It took me to a Seeking Alpha thing. One sec. What happened there? Bring this back up. I want to find this chart. Seeking Alpha has been demonstrating this. Come on. I think you're talking about this. Let me zoom in a bit. Oh, why is the quality on this so bad? I'm going to find a better chart for you. But yeah, the psychology of money. Yes, we go through the cyclical cycle, the nature of it all. Let me pull this up here. I think you're making a really good point here that there is probably some potential more downside. But again, I don't believe that these charts will truly represent like perhaps where the market's going to go. I think, yeah, there's fear baked in the market right now, but the fear is unjust because typically when we go through like these crazy market cycles, there's usually some pretty good reason behind it. And then you kind of get the cyclical psychology of people selling and being fearful. You see it in individual stocks. You see the mispricing of individual stocks, but the economic machine as a whole, like the S&P 500 today, I just don't think earnings are all that bad. And I just don't think this is a true recession where we're going to see a sell-off back. So this psychology was perfect during the pandemic. Like it was an exact representation. People had no idea where the economy was going. Everything came to a halt. There was extreme fear and there was like a flash crash and people just sold off. They didn't want anything to do with it. And yes, I believe that was a good example of this. Yeah, I know it's not a good one. Let me go on to Google here. I'm sorry. I should be trying to present this a little bit cleaner. I've seen what you're talking about because there's some really good charts, but Google is just not showing me some good charts here. I'm sorry. I'm trying to find a good one here. I believe this chart has some real validity to it. I just don't think this market environment, unless I'm missing something and there's a black swan event that's potentially coming down, I think this is the best one. I think this was a good one here, right? This is probably the best one, I think. Can you guys see that okay? Let me just click on it. Is it going to come up for me? Yeah, look at this. This is probably the best example of this, right? So you get anxiety, denial, panic, and that's when you start finding the bottoms. When people are pissed, they all sold out. We saw it with Bitcoin was a good example of this, and then, yeah, I mean, I think the pandemic was the best example because if you take a look at the S&P 500 during the pandemic, let me pull up the S&P 500 real quick. You'll see this exact kind of overlay chart. You could literally put it over certain aspects of the S&P. It's just a matter of you need something that causes that psychological effect, right? And I just don't think what we're seeing right now is that because the earnings would have to reflect it to some degree. There'd have to be more panic. There'd have to be something that like the real estate market, if that crashed at some point in the next 3 to 6 months, if something terrible happened in the mortgage market, I could see that starting like the next like psychology crazy sell-off. But it's more, I think, implicatable toward those individual stocks we talked about, especially in the energy sector where it's getting like over amplified right now. But I have a hard time believing we revisit the October lows. I could be wrong. We'll see. I just don't think the fund managers out there are on the same point. I linked you a lot of fear over bonds. I'm not confident the consumer can keep up as debt grows. Yeah, I don't know. There's a lot. I'm going to start to ramble here, folks. I'll make some more videos on this stuff. I don't want to start bleeding up. Yeah, I do appreciate your time there, Vic. I appreciate everyone coming out. What a fun evening. What a crazy week. And I look forward to next week to be even more of a shit show with earnings. So strap your seatbelt on, get ready for the roller coaster ride. And for God's sakes, as I said on the last stream, just don't stop buying. The only person that's going to lose at the end of the day is the person that stops buying. Just keep buying, keep cost saving, go to Walmart, cut your damn prices. I'll make a video about my shopping bill if it helps you out, but stay cool. Stay awesome, folks. Catch you in the next one. And remember, know what pricing power means. Peace out.